Special Reports is a daily show that will cover issues surrounding the economic collapse. All our reports and daily alert news are backed up by source links. We work very hard to bring you the facts and we research everything before presenting the report. Subscribe for latest on financial crisis, oil price, global economic collapse, dollar collapse, gold, silver, Bitcoin, global reset, new world order, economic collapse, economic news, political, geopolitical news. Today, we talk about buy gold, buy silver, then wait for de-dollarization that's undoubtedly coming. As the U.S. increases its use of the dollar reserve system as a weapon in its trade wars, the rest of the world responds by accelerating its movement away from dollar hegemony. In January, we laid out the 3 key themes for gold in 2018. All of them were linked to factors affecting the U.S. dollar. As noted in that article, the 3 key drivers for the dollar in 2018 continue to be political risk, will the Mueller investigation and or Democrat takeover of Congress in November lead to investigations, indictments, and even impeachment. If so, expect a complete reversal in U.S. confidence and a sharp drop in the dollar index. Geopolitical risk. For now, the general geopolitical landscape has calmed. However, U.S. tensions with Russia, China, North Korea, Iran, and Syria can boil back to the surface on a moment's notice. De-dollarization risk, largely due to the increased use of the dollar payment system as a weapon. Talk of de-dollarization grows louder and more prevalent by the day. For this week, let us focus upon theme number 3, de-dollarization risk, for that's where the action is at present. Over the first 8 months of the year, the Trump administration has either imposed or sought sanctions and tariffs against a seemingly wide range of countries, the most noteworthy being China, Pakistan, Iran, Turkey, and Russia. Viewed separately, it would seem that each sanction or tariff is due to a specific circumstance, i.e. trade deficits with China or nuclear weapons with Iran. However, when we plot the current sanctions regime on a map, a pattern begins to emerge. Notably, the sanctioned nations are all a part of the One Belt, One Road initiative. China, in particular, has spearheaded this project, and they have also recently begun Shanghai-based trading in yuan-denominated gold and crude oil contracts, both of which potentially constitute a direct threat to current, dollar-backed monetary system as well as the petrodollar recycling scheme put in place by the U.S. and Saudi Arabia in 1973. So, is the U.S. now actively using its exorbitant privilege within the dollar-based global monetary system to thwart perceived threats to its hegemony? Many mainstream articles are suddenly appearing that support this notion. In the end, what does this mean for precious metal investors? Initially, not much. It is very likely that any changes to the existing global monetary system will be gradual and not sudden. However, all investors must realize that no monetary regime continues indefinitely, and the power of reserve currency status is fleeting. See below, and any significant changes to the current monetary system will be wildly dollar bearish. Why? By definition, a new system would result in a decrease in dollar demand, while at the same time dollar supply continues to increase due to the soaring level of U.S. debt and deficits. The Econ 101 class you took in college taught you that increasing supply, while decreasing demand for any good leads to a lower price, and the same would be true here. As the value of the dollar declines, the dollar price of all commodities will rise, and significant price inflation will follow in the United States and elsewhere. Interest rates will rise as investors demand a higher, inflation-adjusted rate of return. Higher interest rates will lead to a contracting economy. A contracting economy will lead to decreasing tax revenues. All of this will lead to even more dollar creation and quantitative easing. And, eventually, the entire debt-based system begins to careen wildly out of control. Thus, the time to accumulate physical precious metal as financial protection against this eventuality is now. Yes, we've been preaching this sermon at TFMR since 2010, and since 2013 the dollar price of precious metal has steadily declined. But that in no way means that precious metals prices remain depressed, or that the dollar-based global monetary system will continue forever. Instead, the world continues to move toward a more equitable monetary scheme, one that will invariably revert back to some sort of sound money foundation, the same path that all monetary resets over the centuries have taken. De-dollarization is something that is actually happening. In this program we discuss the time frame of probably the most significant international process taking place in the global economy. Paul says that relinkage of fiat currencies to assets is inevitable. The US dollar is the default global default currency. What has happened, I guess since the Vietnam War, is that with increasing insistence the US has utilized the dollar. I guess the word used now is weaponize it, to a certain degree. This was a behavior modification or tool, for want of a better expression, to guide those countries using the dollar as a clearinghouse mechanism, to go one way or another in terms of their international foreign policy. This has put pressure on a lot of countries, making them go down roads that they would have preferred not to go down. Countries can be forced to trade in US dollars. This is the inequity of the situation, and what gives rise to the idea of an alternative currency, something that has an asset backing, be it gold, or be it a basket of assets, which is something that was talked about 10 years ago today. The direction of the dollar's position in the world gives it the largesse to enable it to run up these incredible debts, and that finances a global presence. Individual countries can of course switch from the US dollar when trading in something like oil, but may choose not to do so, because they weigh what they can gain from keeping in favor with the US in terms of grants, support, or whatever in return for what they will gain from trading their products in local currencies. What has happened, taking this one step forward, is that the new Shanghai oil yuan contracts, which just began on March the 26th, have an interesting twist. There is an agreement with the Shanghai Gold Exchange and the Dubai Gold Exchange that those yuan realized on the oil contracts can be converted to physical gold in 1 kilo bars, and these can technically be transferred to wherever the customer is. More likely than not, the gold will never leave the warranted warehouses in Dubai or Shanghai, but there is the marker. It's a gold price marker, not a dollar price marker. In a way, who controls the currency controls everything. Paul comments that in the end of the day, is the most important thing. Paul thinks that some concrete measures are being taken at the present time to introduce a gold-backed currency/IES. I believe that there is something afoot, whether it is a gold-backed currency or some sort of major change in how the currencies are aligned to assets. My guess is that something of a currency basket may be agreed upon. That basket would be what is regionally traded energy, gold, silver, maybe something else, but instead of having faith in the system alone, this will be backed by something that is real. To a certain extent, de-dollarization is already happening. Paul explains, Iran, because of sanctions, does not use the dollar to trade its oil, but it does use the euro. China today is the largest buyer of oil and uses the yuan. They will not buy in dollars. Russia sells its oil to China in yuan. All of this does not mean, however, that the dollar is going to disappear. This is a very complex issue, but the trend in any event is for the devaluation of the dollar over time. It jumps, fits, and starts, and we won't see the dollar disappear in this decade or over the next decade, but the primacy and the unipolar aspect of the dollar will change. It has to change. Others will not get any progress on this planet. You will find countries, even in the backyard of America, such as Venezuela, which is also the BETE oil currently of the area, is not currently trading its oil for dollars. There are many countries that will join into the de-dollarization process. It is unlikely that America will simply sit back and watch as the world continues with de-dollarization, although to suggest that preventing this may be behind invasions of certain countries is opening oneself up to the accusation of being a controversy theorist. Paul comments, it is not in America's interest to give up on the dollar. How can we otherwise afford our deficits? Now it's over 21 trillion. It boggles the mind. Paul does not predict how many years it will be until we see the end of the supremacy of the US dollar. However, he does give a hint, in a predictable scheme of things. I see 10, 20 years. 10 or 20 years is actually a very short period of time, says host John Harrison. Even then, the dollar will not disappear. It will always be a strong player, but not the only player. That actually in the long run is to the benefit of Americans. America does not seem to be preparing for this, however. Paul comments, the party goes on until something happens. In markets, as in governments, until something really bites you painfully, you would rather not pay attention to it. It will go away by itself. That's the way markets work. Consider Kodak, a very famous company for decades. It carried on as nothing happened with film until they just collapsed, until they just imploded. That happens often enough on the historical drawing board. How Russia and China may soon dethrone the petrodollar. Beijing's launch of yuan-denominated oil futures may facilitate the internationalization of the Chinese currency and deal a heavy blow to the long-standing dominance of the U.S. petrodollar. On March 26, China kicked off its first-ever yuan-denominated oil futures on the Shanghai International Energy Exchange. Sputnik contributor Igor Naumov writes that Russia is ready to support the Chinese contracts, citing a source close to the top management of Stock Exchange St. Petersburg, SBBEX. Currently, the US dollar is used as the contract currency in the global hydrocarbon trading system, as well as for other commodities, the journalist explained. This is what largely provides the dollar with its status of the world's leading reserve currency. However, the yuan is seeking to dislodge the American petrodollar from one of the fastest-growing oil markets in the world. According to Evgeny Itsakov, associate professor at the Department of Management and Entrepreneurship of the Russian Presidential Academy of National Economy and Public Administration, RANEPA, the launch of yuan-denominated crude futures could become a trigger for traders to sell dollars and raise their long positions on the Chinese currency. This is Beijing's second attempt to launch its own oil futures. The first was undertaken in 1993, when China opened oil futures exchanges in Beijing and Shanghai. However, China closed them down 2 years later due to unstable commodity markets and the yuan's weakness at the time. A lot has changed since then, the journalist stressed. First, the IMF added the Chinese currency to its special drawing rights (SDR) basket in 2016. Second, China surpassed the U.S. as the world's largest oil importer in 2017. According to the U.S. Energy Information Administration, EI, in 2017 China imported 8.4 million barrels of crude per day, versus America's 7.9 million barrels per day. Thus, by kicking off yuan-denominated oil futures, Beijing could kill two birds with one stone, reducing its dependence on the dollar amid a growing hydrocarbon appetite, and further promoting the yuan. Speaking to the South China Morning Post, Xiao Yu, chief economist at the Chinese securities company Orient Securities, stressed that the contracts, denominated in yuan, can technically help China gain pricing power and internationalize the yuan, if a mature market with strong trading activity among global investors is set up. China isn't the only country seeking to use its national currency in the oil market, Naumov pointed out, referring to Stock Exchange St. Petersburg, SBBEX, which has been carrying out operations with Russian Urals oil futures using rubles since November 2016. Urals oil, a Russian export crude brand, is a heavy composition of oil produced in the Ural region, western Siberia, and Povalsky. Naumov disclosed, citing an anonymous source with knowledge of the matter, that Russian trade specialists are holding talks with their Chinese counterparts on potentially cooperating by denominating oil contracts in their national currencies. The other day, Russian specialists went to the talks in Shanghai, the journalist highlighted. The agenda is to coordinate actions so that both futures contracts support each other. It is particularly important since it usually takes a long time for a new contract to gain international recognition and become a full-fledged benchmark, Naumov remarked. Meanwhile, Moscow and Beijing are actively reducing their dependence on the dollar in mutual trade. In October 2017, China launched a PVP payment system for transactions in yuan and Russian rubles. This means that payments for Russian oil deliveries to China, which have reached 60 million metric tons per year, could be done without a U.S. intermediary, the journalist explained. China's launch of its own oil futures on the Shanghai International Energy Exchange could hardly be overestimated, and is largely seen as Beijing's attempt to dethrone the petrodollar, which has been maintaining its high position since the 1970s. In October 2017, CNBC quoted Carl Weinberg, chief economist and managing director at High Frequency Economics, who suggested that moving oil trade out of dollars into yuan will take right now between $600 billion and $800 billion worth of transactions out of the dollar. For his part, Gal Luft, co-director of the Institute for the Analysis of Global Security, a Washington-based think tank, told the media outlet on October 4, 2017, that China's plan to to launch own crude futures is another indicator of the beginning of the glacial, and I emphasize the word glacial, decline of the dollar. Thanks for watching. Tell us what you think in the comments section below.